Good afternoon. My name is Suhei Mojica, and I am the San Pablo EDC coordinator for business and assets. Today, I will be presenting to you in regards to our new program, Splash. Splash stands for San Pablo Loan Assistance for Sustainable Housing, and it utilizes San Pablo Housing Successor Agency's funding. The mission for this program is to help low-income individuals become first-time home buyers in the city of San Pablo. What's different about Splash? Splash utilizes shared appreciation loans, shortened as SAL. They provide loans up to $50,000 or a maximum of 10% of the purchase price for a 15-year term. There is no payment required during the term. The borrower must provide 3.5% of the purchase price at the close of escrow. How does this help homebuyers? It lowers their monthly housing payments by deferring payback. It lowers homebuyers' risk in an uncertain real estate market, and it prioritizes first responders, veterans, teachers, and senior citizens. The program is governed in many different areas. So the program funds are from the Housing Successor Agency, and it's using low to moderate income funds. The program is administered by the San Pablo Economic Development Corporation, San Pablo EDC. We take care of the program marketing, the application review, the underwriting, the convening credit committee, and compliance and settlement. The Splash loan approval is done by a credit committee consisting of 2 San Pablo EDC finance committee members and 1 HSA designated staff. The qualifications or pre-eligibility or requirements for the applicant must meet or fall below the low to moderate income 80% for Contra Costa County. The total household assets cannot be more than $250,000. You may not have owned a home in the past 3 years, and you must have a minimum FICO score of 620 or above. No applicant may have filed for bankruptcy in the last 3 years. The applicant must attend a HUD certified first-time homebuyer workshop within 6 months prior to the Splash application. And the certification must be presented with the application. The total mortgage payments may not exceed 40% of the monthly household income, and that includes the mortgage, HOA fees, insurance, property taxes, etc. The purchase price of the property cannot exceed 120% of the median housing property price as determined by the HSA. All applicants must be either a citizen or a national of the United States. Total combined household income cannot exceed the HCD published state income limits for low-income household. These are requirements of the Housing Successor Agency's Low-Income Housing Fund. Home buyers must be pre-approved for a primary home loan. And therefore, we recommend that prior to submitting an application that you have worked with a lender to discover what you can afford in terms of a home. And we can provide a list of lenders and realtors. If you want to get in contact with us, we can make that available. The Splash fundamentals, basically after the loan maturity up to 15 years, Splash clients will pay back loan principal plus the equity share, loan principal estimated appreciation on house at loan closing. If the property fails to accumulate value greater than 3%, simple interest of the principal for every year of the life of the loan, the borrower will need to pay the principal of loan in its entirety and plus 3% simple interest of the principal for every year of the loan. Additionally, the Housing Successor Agency will forgive 50% of their portion of appreciated equity share or interest if the borrower has worked as a first responder or worked at a school that serves a San Pablo resident for the entirety of the loan. For example, we have an example here. The borrower purchased the property for $400,000 and the HSA provided a splash loan of $40,000. That's basically 10% of the sales price. The borrower is not a qualified teacher or a first responder. The borrower pays back loan when due. 15 years later, the property is determined to be worth $600,000. So it has appreciated $200,000. The borrower will owe the HSA a total of $60,000, which is the principal of $40,000 and the equity share of $20,000. On example 2 here, the borrower purchased the property for $400,000 and the HSA provided a splash loan of $40,000, which is the 10% of the sales price. The borrower works as a qualified teacher or first responder for the entirety of the loan. The borrower pays the back loan after 7 years, and the property is determined to be worth $500,000, and therefore it has $100,000 in appreciation. The borrower would owe the HSA a total of $45,000, which is basically the principal of the $40,000, the equity share of $5,000, which means that 50% forgiveness for service as a teacher or a first responder. The application process for Splash is to first review the qualification requirements. You can find these requirements and review the Splash program guidelines on our website at www.sanpabloedc.org. You would go under Home Buyers, and then you would click on Splash. You can find all of the required documentation, guidelines, specification of the program. And so we definitely recommend that you take a look at all of that before you intend to submit an application. The second thing would be to pre-qualify with a lender. This will help guide you in regards to your house search by knowing the maximum a lender will loan you for a purchase of a home. The next thing is to find a great real estate agent once you know how much of a house you can afford. The next thing would be you would need to attend and pass a HUD certified first-time homebuyer workshop no more than 6 months prior to submitting an application. And again, as we mentioned earlier, work with a mortgage broker to find out what you can afford and find a real estate agent who understands the programs and can work with you and guide you. Once you're ready to submit the Splash application, you would prepare and submit a complete Splash application packet to the Splash administrator, which in this case would be the San Pablo Economic Development Corporation. You would need to submit supporting documentation for income and asset verification for all household members. There is a $1,000 non-refundable application fee that would need to be submitted with the application. Certificate of completion of a HUD certified first-time homebuyers workshop no more than 6 months prior to the application. The Splash program actually complements other first-time homebuyer programs, which, for example, we have the WISH program that is made available through the Federal Home Loan Bank of San Francisco with member banks in the community. Then there's the HFA, the CALFA, Community Reinvestment Act loans, CRA, Economic Opportunity Mortgage, School and Teacher Employee Assistance Program, My Home program, Mortgage Credit Certificate Tax Credit Program, NCC. And if you would like more information, you can definitely give us a call and contact us. We definitely work with WISH here at San Pablo EDC as well. So we would be more than happy to provide you with information on this other first-time homebuyer program. It looks like we don't have any questions. So if you would like more information, I would recommend that you visit our website. Again, it's www.sanpabloedc.org, or you can give us a call at 510-215-3200 if you would prefer to get in touch with me directly. My direct line is 510-215-3206. And you can also email us at info@sanpabloedc.org. Again, what we recommend is that you go on our website, take a look at all of the information. There is a interest and pre-eligibility form that we recommend that you fill out. Then it would come to us, and we would then be in contact with you to further assist you with any questions that you may have. So again, thank you, and I hope this presentation is helpful in regards to providing you more information on Splash, a first-time home buyer down payment assistance program. And again, please give us a call if you would like to get in contact with one of us. Thank you and have a great evening. Bye-bye.